Okay, so I see attendees are here now, so I think we're good to start. طيب, Assalamu alaikum everyone, and welcome to this event, and thank you for joining us. My name is Rawan Aljermawi. I'm a board member at the CFA Society Saudi Arabia, and on behalf of the society, we'd like to thank Jada for hosting our members today, and we're hopeful that this will be a start of a long and strong relationship, inshallah. I also happen to be part of the investment team at Jada as well. So to discuss today's event, we have Adel Ateeq, CEO of Jada, and we also have Sulaiman Alkhushi. He's a vice president at the private equity department at Jada. And last but definitely not least, we have Assad Karam. He's the head of private equity at Alpha Capital. Both Assad and Sulaiman, charter holders and members of the CFA Society Saudi Arabia. Before we start, I just want to let our audience know that we have Q&A box. So please, if you have any questions, put them there, and we have some time at the end of this session to, inshallah, discuss all of your questions. So Adel will kickstart the discussion with you. So Jada have been active in the private equity landscape for the past 2 years now. So could you please reflect on this journey so far and share more about Jada's role and mandate in the ecosystem?
Assalamu alaikum wa rahmatullah. Thank you, Rawan, Sulaiman, and Assad, and everybody at the CFA Society for joining us today. It's definitely an honor and a pleasure to speak to you and give you a brief about what we're doing at Jada and where we could collaborate with the CFA Society for the advancement and development of the private equity industry in Saudi. We definitely share a lot of objectives, and we should also participate in a lot of initiatives that serves those shared objectives. So Jada, I'll give you a brief about what do we do at Jada and what is our mandate. So Jada has been established by the Public Investment Fund as its own vehicle when it comes to investing in private equity and venture capital within Saudi. So we have a mandate to invest in a certain asset class in a certain geography. Obviously, this mandate comes with a lot of responsibility, given that this is a nascent industry in a developing area. So unlike when investing in a developed market or in a developed asset class, our mandate on top of finding the right investment and finding the best team to execute on the strategy that we're looking for, we have a wider mandate of developing an industry, and because it's still nascent and it's still in early stage, and here we share a lot of objectives and with the CFA Society, because we're our mandate is to promote the industry. It's to bring best practices. It's to empower professionalism, and to us, professionalism is both a competency on competency level, but also on conduct level. So ethical standards is important, and it's embedded in everything we do. But obviously, we're not a regulator, nor we are an association like the CFA composed of the members. We come at it, although probably they're the same objective, but we come to it through being an investor. So we don't enforce rules, but obviously we We negotiate heavily, and we ensure that best practices are taken care of in order to develop the industry and in order to be to set the right standard for other investors. It's one important role of Jeddah is not to make money on its own, although that's very important, but also to create an opportunity for the others to benefit and to benefit from the potential of investing in Saudi private equity, especially in the SME sector.
Well, we definitely have a lot of objectives in common, and whether in professionalism or in ethical standards, as you've mentioned, and we look forward to joining forces and working on future initiatives together, inshallah. So staying on a similar topic, private equity had proven to be to contribute in the growth of economy in emerging markets. So how do you see the private equity role in Saudi in promoting private equity or promoting the economic development and innovation as well?
So at the onset of the establishing Jeddah, the main objective of establishing Jeddah, before we talk about private equity, was to develop SME and help develop SME sectors. Obviously, SMEs are important to any economy because of the contribution to GDP growth, the vast contribution to jobs and employments, like any other developing and developing country. And Saudi share of SMEs in terms of GDP or employment is well known to be below developing countries and even developed countries. So hence the vision and all the government initiatives towards making sure that SMEs share goes to its potential and beyond. But where does private equity comes in is that if you look at development of different economies and different markets, and you'll see a higher correlation between SMEs contribution and to the economy and jobs with the development of capital market, and specifically the investment management industry in that country or economy. And we've seen it in developed country or in the developing country. What you see is a thriving private equity market or a thriving VC market is when there is a strong private equity and venture capital industry. In order to achieve the ultimate objective of creation of Jeddah, which is empower and help SMEs, we chose to do it indirectly through developing a private equity industry. And hence Jeddah was created as a fund of fund, not a direct investor. We could have chosen to invest directly in SMEs, but to be honest with you, the impact that we wanted to create on the SMEs is larger than any institution to do. We need to bring everybody in the development of that sector, and we've seen, especially in developed and developing countries, institutional capital is very vital for the development of those industries. Whether local or international, and if we did it alone, we could have been successful, but we could have been successful only in developing, in probably generating good returns, but on a small subset of the market. But because we wanted to have a higher impact, we needed every institutional capital that could invest in SMEs, and that's why we wanted to develop the industry. This industry will serve us and will serve every other institutional investor.
Thank you, Adel. I think with the announcement that we've been seeing recently on new investment and the indirect investment in the SMEs, we see the impact that Jada is working on being on a multi-level, whether it's in the private equity industry or the direct companies themselves. And we wish more success, inshallah, for Jada. Sulaiman, I'll move to you now as a charter holder and a member of the CFA Society Saudi Arabia. So we've seen the society to have a fast-growing member base, and according to the statistics, around or over 15% of our members are working in the private equity. So in your view, how can CFA members have a larger contribution and a more positive impact on the development of the private equity industry?
Yes, thank you, Rawan. So we definitely in Jeddah recognize the growth of the CFA society and the member base. I remember when I got my charter back in 2017, we were among the largest CFA societies in terms of growing the number of the member base. And I believe this growth still continues, and we believe the CFA society and the investment community itself provide the most needed qualified talent to lead and manage those private equity funds that we see developing in now and in the future. And when we look at this, the knowledge and the skills that you learn and you get in the CFA program, and also with your work experience, are very valuable for the private equity funds throughout all the stages that a private equity fund would go through, from looking at the market opportunity itself to looking at the deals and evaluating them, structuring them, to the portfolio management, and eventually to structuring the exit for the fund. So these are very valuable, but these are not the only things that are valuable to the private equity and can definitely the candidates and member provide. But also there is another angle to it, and let's face it, when a sponsor or a fund manager, whether a local entity or an international fund manager coming into Saudi, no matter how much they know about the best practices and the standards and all that, they will definitely need people on the ground that understand the local context and understand the investment industry and the business industry in the local market itself. People who have the network and people who can easily connect with the founders of these portfolio companies and can grow the relationship with them and grow the prospect for the funds in the process. So there are so many different ways that the candidates and member can play and can help in the support of this private equity industry, definitely.
Thank you very much, Sulaiman. So moving to the GP on our panel today, Assad, it was recently announced that Alpha Capital Saudi Food and Beverages Growth Fund was the first PE fund that Jada added to its portfolio. So could you please just give us an overview of the fund and the rationale behind it, choosing the sector and the strategy you have for the fund?
Sure. Thank you, Rawan. Thank you, Adel and Sulaiman, for having me on this panel. So basically, the Alpha Saudi Growth Fund, the FNB fund, is a $100 million private equity growth fund focused on the FNB sector in Saudi Arabia. The idea of the fund started about 2 years ago after the successful closing of our first a private equity fund at Alpha Capital that acquired, it was a single asset fund that acquired one of the fastest growing coffee chains, specialty coffee chains in Saudi Arabia. Following that, we've seen a large appetite from investors to invest in the F&B space. And throughout this period, we've been analyzing and studying the F&B market, and we've met and screened over 300 opportunities. And we were able to basically summarize what are the needs and challenges of both the entrepreneurs and the investors. So the idea of the fund, the focus on F&B is one of the sectors that we at Alpha Capital are focusing on within our private equity strategy because of the favorable fundamentals. Obviously, you have demographics. 70% today of the Saudi population is below the age of 40. Today, Saudi Arabia has 20% of household expenditures goes to F&B, which is one of the largest or top 5 countries within the G20 countries. The local cultural shift that we've seen recently from the lifting of the ban on women driving and the higher participation of women in the labor market, which increased the percentage of working couples and hence the higher reliance on food eaten away from home. Also, restaurants in the GCC and particularly in Saudi Arabia remain the main entertainment for the population. So all these factors created a very dynamic and buoyant F&B scene. And we've seen recently the growth in the space and the new entrants, the large number of new entrants in the F&B sector. So as I said, we've seen the challenges to investors to penetrate this segment and the challenges also to entrepreneurs. Investors want to have exposure to the F&B, but they don't necessarily have the capabilities in-house. This is something they could have developed, but over the past few years, we've seen a common trend among sophisticated investors and family groups, which was basically focusing on their core operations and try to outsource any outside activities. Obviously, when you're talking about the F&B, the fastest growing and the most attractive segment within the F&B are the small upcoming concepts, which obviously come with their own challenges. They have weak governance, which investors are not willing to tackle. Their size is small also, which investors also are not very keen on pursuing on their own. The high valuation often commanded by entrepreneurs, because these are people who are passionate about F&B and start these businesses out of passion. So there's always this emotional attachment that comes with dealing with these entrepreneurs and overcoming the emotional attachment to their businesses. And last but not least, the lack of exit strategy. How do you exit as an investor? If you come in and invest into an F&B concept, how do you exit such an investment? On the entrepreneur side, we've seen that many concepts succeed in the first few years when they start with 1, 2, 3 branches, and at some point throughout their journey, they fail to adapt to the continuing or to continuous change in trend within the F&B, and they fall a trap of the operations, and they basically lose focus on their bigger vision or the strategy. These also cannot afford human capital, the qualified human capital, because of their size. Obviously, their weak governance weighs heavily on reporting and hence decision-making process. As I said also, the failure to continuously reassess not only their strategies, but their operational efficiencies and processes also turned out to be a major challenge. And last but not least, the lack of financial acumen. So they want capital, but they don't know how to access it. They don't know what they need to do to access this capital. So the idea of the fund came basically to bridge this gap between entrepreneurs and investors. And at Alpha Capital, we have structured the fund in a way where we add value to bridge this gap. We engage proactively with our portfolio companies to help them identify and be ahead of the curve when there's a new trend coming. We give them access, we help them also recruit and give them access to top-notch C-level executives. We obviously instill best practice governance and reporting dashboards to facilitate their decision-making process. We provide strategic support. We optimize the capital structure. We create for them liquidity events. And we've added also on the value add value add pillars of Alpha Capital, we've added a new value add pillar, which is the operational value add, which not a lot of private equity firms offer today as part of their value proposition. And we've done this through a partnership with a lean management consultant, an operating partner that extends its services to our portfolio companies for free, to help them also navigate the increasingly challenging business environment that they operate in, and the high competitive business environment they operate in.
Thank you, Assad. So staying on Alpha's growth fund for a bit, historically the Saudi PE industry was dominated by single asset funds as opposed to blind pool funds. So what made you structure the fund as a blind pool?
Good question. So if you look before 2008, most of the majority of the PE players in the region and in Saudi Arabia were structured as blind pool models. And since the financial crisis, investors became more demanding and they became more skeptical about the asset class itself. So a blind pool fund gives the GP more flexibility in the investment making decision. So LPs don't have a say in the investment making decisions. And also it reduces the frequency of fundraising. So instead of you raising funds on a deal by deal basis, you do it for a fund and you move on with life for 7 years, 8 years, whatever it is. So after the financial crisis, LPs wanted more visibility on the GP, and they started demanding a say in the investment decision. PE firms started accommodating this post 2008 by offering LPs a deal-by-deal model or blind pools with opt-out options. As far as Alpha Capital is concerned, and this specific fund is concerned, we decided to go for a blind pool, given the strategy of the fund to focus on SMEs operating within the F&B space. And as I mentioned before, most of these successful F&B concepts that the fund is targeting are small in nature and do not warrant a standalone fund. So this was the idea, basically to invest in multiple concepts within the SME space and to extract cross-portfolio synergies under one umbrella.
Thank you, Assad. And we're happy to see things going back to normal because, as you said, SMEs are more benefited under a blind pool fund, and it goes to the benefit, I think, of all participants in the market. So going back to you, Sulaiman, and a question that I believe will be useful to all the aspiring GPs joining us here today. As part of Jada's PE team, what does Jada look for in funds when evaluating a candidate fund? Okay, so
when we are considering an investment in a private equity fund that we receive in Jada, we try to answer three main questions. The first question would be about what is the strategy that the fund is proposing. The second one would be, is the team managing the fund able to execute this very specific strategy? And the third one would be, is the team managing the fund willing and committing to fight for the success of the fund, not only today, but today and tomorrow and to the last day in the life of the fund? So these are very important questions to get a clear answer on. So on the strategy part, we would expect the fund manager to have good clarity on the sector they are investing in, on the geography they would be investing in, and definitely giving our Saudi mandate, we would invest only on funds that are primarily investing in Saudi SMEs. We would expect them to have clarity on the stage in the portfolio company that they will invest in and the number of portfolio companies. We obviously do not invest in a single asset fund, given the very concentrated or concentration risk that it has. So we definitely always invest in blind pool funds. Other than these very main and important things to see in the strategy is what Assad alluded to before, which is the added value they can provide to the company and to the founders, and how can they actually help them expand and grow the business they will be investing in. And we also expect them to have clarity on how are they going to generate good deals for the fund. So these are mainly about the strategy. Then we would go to see and to dig more deep on the team to see their qualifications and to make sure that they have the appropriate skill set to execute this strategy. So we would look at the investment committee, we look at the rest of the team, we look at their previous experience and how relevant it is to the proposed strategy of the fund. We understand that the standard track record that we would find in global and developed markets are probably not available in most of the funds that we would see in Saudi Arabia. And this is just, I think, is a normal result of the market and the asset class being new. But we look at the previous experience and how it is relevant to the strategy and the fund. And we look at the team as a group and if they have worked before together or not, and how do they work together? Do they complement each other in terms of skills and competencies? And we do appreciate a culture of empowerment where junior people are empowered to contribute and to say their minds, because we believe culture like this would help the performance of the investment. So this is the team. And then the third question would be on the team willingness to fight for the success of the fund on the long run. And this is a very important one because we need to see 100% alignment of interest between the GP and the LPs. And the industry globally has developed very specific tools to make sure that this alignment is there. So one of these tools is the carried interest, as most of the audience would know, and it is meant to enable the investment team to receive a portion of the gain the fund would be able to make, provided they reach a certain hurdle rate. And this would usually come with a vesting schedule, so people would earn the right to this carry gradually with time. So in summary, you can see that we would focus on very compelling and good strategy, strong team, and long-term commitment and long-term alignment of interest between the fund manager and the investors.
Thank you very much, Sulaiman. Adel, a question for you. So PE firms are known to attract top talents. How do you see the attraction and retention of talents to be translating into tangible value for PE firms? And how do you expect PE or local PE in particular industry to keep a competitive edge over other areas of investment, especially in retaining talents?
Sure. I'm not saying anything new if I say investment management is a people business, and it's and because we're speaking to CFA society, I remember back in the days when I joined asset management industry only a few years ago. There were a handful of CFA members or CFA charter holders, people who I know personally, and I can count them on one hand. Now, mashallah, I lost counting, and I lost, and then there's so many of good talent that is available. I don't think it's a matter of having talent. I really believe that there is a lot of talent in Saudi and expats. I think it's a matter of how do you bring best talent to the industry. Sulaiman talked about the importance of the team and the capability of the team, and then having the team aligned to the or their interests aligned with the LP interest or the investor interest. I think this is a very important notion that not only makes sure that the investors are successful, but it also is important to attract the best talent. If pay philosophy is in Saudi, in the private equity industry, is benchmarked to pay philosophy in any other developed any other private equity industry, I think that in itself will ensure that private equity can offer better opportunity to any individual than any other industry can offer, regardless of that industry, whether it's government or private. The notion of being a partner, not an employee, is what investors are looking for. We're not looking for people who does a job from one point of time in the day and then to a certain point of time in the day, and it's being an investment team is like it's a partnership with the investor, and it's a long-term partnership with the investors, and it comes with its ups and downs and pluses or minuses. So if the investor does well, the team should do well, and they should be it should be a wealth creation for that team. And if they don't do well, it should also hurt. So it's not, as I said, it's not a job. It's a partnership, but hopefully over time, best talent could be retained, because best talent will do well for their investor and for their own. And I think if we are able to do that, I think this industry will acquire and retain the best talent in the everywhere else in Saudi, and over time, successful funds will be a role model for others. People will also emerge out of funds and create their own funds, and that this industry will develop like it developed in other places. I think it's, as I said, talent is important, and we're trying to cater or to develop that talent through a number of initiatives. I mean, and that's also another objective and initiative that we share with the CFA Society. I mean, we focus on training and raising professionalism, but the most important factor, as I said, is embedded in the structure, is embedded in the working model of a private equity fund, where people are important to the success of the funds, and their interests are aligned with the investor of the fund, making sure that success will be shared with everybody.
Thank you, Abu Raed. Assad, from your experience in the PE industry, what do you see the key success factors for a PE firm, and what are the challenges that PE funds are facing now?
Great. So for the key success factors, I think private equity is a very local business, and for a private equity firm to be successful, it needs to have local presence and a hands-on team with local experience. And we've seen a lot of private equity, international private equity firms trying to conduct private equity in Saudi from abroad, and I don't think this experience was very successful for them. Another key success factor, I think, also is having an adequate fund size for the addressable market. So for us at Alpha Capital, when we raised a $100 million fund to invest in SMEs operating in the food and beverage space, we could have taken the fund size to $200-300 million. But having an adequate size fund is also key, because we've seen in the past that you had all these mega funds that were sitting on piles of cash and committed capital, but they struggled to deploy. A private equity fund or firm needs to have also a committed and well incentivized team, as Sulaiman mentioned. Value add LPs, also the likes of Jada, is very key. Also a proven track record in the sector and market the fund is investing in is also key. A deep understanding of the local business culture, the legal and regulatory landscapes is also very important, because every market is very particular, the way the business is done and the culture is different. A valid and relevant value add proposition beyond the standard PE pitch. And this is why we've added a new dimension to our fund, which is the operational value add. And last but not least, I think also the ability to source quality deals and price them properly. Because and this takes me to answer your questions about the challenges. Today, one of the challenges that PE firms face in Saudi Arabia is the scarcity of good deals. Sourcing good deals at attractive valuations remains a big challenge. Another challenge would be the valuation gap. So bridging the valuation gap between the seller and the buyer remains also very tricky, because I've touched on this earlier on, the emotional attachment. So you have sellers always attached emotionally to their assets, and they think their value is way beyond what the fair value is. Another challenge is the competition from family groups that are doing private equity, they're investing in private businesses, but these family groups come with various business interests in multiple industries, which can provide a better offering to a seller when it comes to synergies. And they come with a more compelling offer, basically, for sellers. Exits in Saudi Arabia remain challenging, especially if you're exiting through an IPO on the Saudi stock market, and if you own a majority stake in a business, because divesting a large stake in the public market takes time and also is a regulatory hassle. And the restrictive, last but not least, also the restrictive legal system. So enforceability today of legal agreements, especially on clauses related to a drag along and the tag along and the put options and what have you, remains also untested. And this limits the creativity of deal structuring when it comes to private equity firms.
Rawan, can I comment on what Assad has said? I think these are very valid challenges, and I think everybody shares those valid challenges. But I don't want to simplify the problem or simplify the solution, but I think without saying there is a magic bullet, I think talent could solve a lot of these issues. Finding good deals is also a matter of being able to go and fetch. It's not being just wait and see approach. A good investment manager is, and this is important. We see investment managers, great investment managers are those who will come with long history of not just financial experience, but running and operating companies. And that experience brings in good networking, brings in access to deals beyond access of deals coming through investment advisors or brokers. Or I think good deals are sought after, not being not offered. So I think I really believe that it needs someone with a long track of experience, with a great network, beyond investment track record. I mean, of operation experience that could help someone to operate at least within an industry that they know. In terms of valuation, absolutely. I think it's because we have, as if we agree that there is scarcity of deals, that obviously means that there is a lot of capital chasing few deals, and that ultimately push valuation up. I think it's valuation is not it should not be left to a bidding war. It's not I mean, without the team having an added value, or a fund having an added value to a seller or to a startup or SMEs, I think it's obviously they'll go for the highest bidder. I think the quality of the team will bring the valuation down, because me as a seller or a startup or a SME that wants to grow, obviously I'd like to have a good price, but ultimately, even if I sell at a lower price to someone who can help me, someone I can see the value of adding longer term valuation and improvement in the business, obviously I'll go with that. But that needs to be proven. And I think the only way you can prove it or you can sell is having great talent. That's what they look for. It's not if it is a private equity fund that is providing money only, obviously they'll go for the highest bidder. But I think what private equity and Assad is what you alluded in the beginning is it's not about money. If it was about money, we could have just invested directly. We could have written checks and invested in companies. We don't have the capacity, nor we are equipped to, as an LP, as an investor, to help and support those companies. We could invest in them, but then our added value will stop at the financial side. But the presence of a private equity, a strong private equity, is not about capital. It's much more beyond capital. And we believe that the added value that will bring even valuation down, and I think it will solve a lot of the problem and the challenges that we've seen in the industry.
Adel, if I may, and I couldn't agree more with what you said, especially on the deal sourcing. Deal sourcing is a proactive approach. It's not a reactive approach, and this is why when Rawan asked what are the key success factors for a PE firm, on the sourcing side, I said it's very important to have a local team with local network and local experience, somebody who knows how to structure, to source, to connect the dots, and to source, to create their own deal, as opposed to being passive and waiting for the deal to come to them. So this is on that. On the valuation, obviously, I mean, we're seeing that the valuation is a challenge, but on the fact of the value add, yes, definitely, and this is how a private equity firm can get good deals. They compensate their low price with the value add they bring in, but it depends also on the deal structure, whether it's a cash in or a cash out. If a seller is completely exiting the business or a silent partner is selling a stake in the business, they wouldn't care as much about the value add than at the price. So I just wanted to add this. So this also depends on the structure of the deal that a PE firm is contemplating.
Yeah, of course, it depends on the stage of the business and whether it's a buyout or a growth capital. But I think we can all agree here that the impact of the support of a good manager would outlast just a large capital deployed at the beginning of acquiring a company. So going back to you, Sulaiman, you touched a bit on the alignment of interest between GPs and LPs. And a unique feature for PE to achieve that is the carried interest. So would you please shed some more light on how GPs are vesting their carry in particular?
Yes, and maybe to give it more context, as Abu Raid and as I just talked about the carry and the reward system and how the team would be more incentivized and aligned by the carry that is provided, giving the fund is able to make the performance that is higher the rate. So maybe I would talk about the management fees because we see the carried interest as providing that incentive and not the management fees, because we believe the management fee is meant to cover and to pay for all the expenses that are paid by just for running the business, including the salary of the talent that the fund manager is attracting. But it shouldn't be that excessive high, so people can create a wealth out of it regardless of the performance of the fund. So the wealth creation comes in from the carried interest, and the vesting schedule of this carried interest would be gradually over time. And the objective of it vesting gradually over time is to make sure that people do everything they can and the best that they can, and stay with the fund for the longest period they can. So to explain maybe how it works in reality, if I give maybe a simple example for a fund that has 10 years life, and that the carry in this fund would vest 10% each year. And let's say I was part of the investment team at that fund, and I had to leave the fund at the end of year 5. So at the end of year 5, I vested only 50% of my carry if it is realized. So I would know that in advance. Let's say the fund was able at the end of the fund to make a gain of 100 million. And let's say 20% of that 100 million, 20 million would go to the team. If I deserve to take 10% of that carry, if I have stated, so I would take 2 million out of this 20. But because I left half the way through and I only vested 50%, so out of that 2 million, I would only get 1 million. This is a very simple example. They come with different schedules and different timetables, but we think this is one of the incentives that we usually see in private equity, to make sure that the carry has its meaningful impact on the team.
Thank you, Sulaiman. I'm conscious of the time and I see a few questions from our attendees, so maybe we'll start taking these questions. So I have 2 questions and I think they can be answered at once. So Nassar Hassan is asking, how can you assess the risks without convenient track records of performance in developing markets? And we have another question that says, does Jada invest in manager raising their first fund? So for the other questions, for the second question, the answer I know is yes. So can you please share more on how do you assess these first-time fund managers? And I leave it to Adel or Sulaiman to take this one.
So if I may start, and then Abu Raid, definitely if you want to add something. So we definitely see if we are to stick to ask for a long track record that is with a strategy that is relevant and performance that is sufficient enough to invest, and only invest with that, probably in a new market, that would probably not exist. But there are definitely good ways to have good insights on how the team will perform. One of them is looking at their previous experience. Have they done investment before? Did they add value to the companies that they managed before or they bought before? And we do part of our due diligence when we get in the full DD. We also go and ask and talked to a previous investor that have invested with these with the leadership in this fund, and also with portfolio companies they have invested with, and we ask about their add value there. So there are ways to get some insight too, but the historical performance they did, or the historical performance that is available for the globally and maybe in developed market is not of these. But I'll leave it to Abu Raid if you want to add anything in this. You are on mute, Abu Raid.
We do invest in what we call emerging fund managers. and the way we look at those emerging fund managers, it doesn't mean that they don't have any investment experience. To us, an emerging fund manager is someone who's raising their first, maybe second, third-party capital investing in private equity. So that's how we look at it. It doesn't mean that they have no investment experience whatsoever, but that investment experience could happen within a larger fund, could happen within a family office, within an investment firm, within a corporate. So something we could assess. Obviously, track record is important, but also the strategy, the team, because we don't invest in with one person. We invest with a group of people. So we look at the capabilities of the team as a whole. So maybe one person on their own would not qualify, but the accumulation of different experiences could complement to form a good group. And obviously, we take risk. We take some risk with fund managers a risk that we accept because we want to develop the industry, but actually not only because of that. Even in developed markets, there has been a history of emerging fund managers outperforming larger funds and established one. So there is merit actually to be investing with emerging fund managers because they are first, they're investing smaller amounts that obviously with scale comes a lot of other complexities, but also usually smaller funds and emerging fund managers are more eager to succeed because there is so much on the line for them and their future and their careers. So there is risk, but it's calculated and mitigated risk, and like any, we also run a fund. So we don't invest with fund manager. We invest with different funds at different stages, at different vintages, at different geographies, and at different industries. So that also mitigates some of the risk that we could take with any certain fund manager.
Thank you very much, Abu Raed. This is an interesting insight, and I hope it helps the aspiring GPs with us here today. So we have a question for you, Assad, particularly on the F&B industry. So someone is asking, would you see an overinflated in the F&B sector in terms of pricing and valuation? And do you also see an oversupply in the F&B market participants?
So I couldn't hear the question well. So the first part is about the prices being inflated?
Yes, pricing and valuation of F&B being inflated, and also an oversupply in the participants.
So on the pricing, yes, we see some inflation in the prices. That was before COVID. So nowadays, after COVID, I think the market has adjusted and the expectations of F&B operators have changed. We're seeing people more open to discussing valuations because they, obviously not with anyone, the value add today when we come and speak with investors and we explain the value add that we bring, they are automatically convinced about where we can take their businesses, and they're willing to accept a lower price than they were commanding before. And this has happened. We've been in talks with some potential investments since prior to COVID. And even though, I mean, the situation was very bad and the F&B sector was hit badly, we were not trying to take advantage of the situation, and we tried to price businesses fairly. With that, they also accepted lower entry point levels because of the value add that we bring, and basically especially on the operational side of things, because this is their main challenge today. So that's on the pricing and the inflation. Is the market overcrowded? It depends. There are always opportunities within the F&B. It depends what are you looking for, which subsegment within F&B you're focusing on, whether it's restaurants or anything across the value or the supply chain. But there are definitely values. If you're talking about restaurants, yes, but I think there are also opportunities within the restaurant services businesses, and you need to have an edge, a unique selling proposition as a concept, and you need to be targeting the right segment.
Thank you very much, Assad. I'm afraid we have came to the end of today's discussion. So thank you, Adel, Sulaiman, and Assad for this very informative discussion. Thank you everyone who attended and joined us here today, and we hope to see you inshallah for future events hosted by Jada and the CFA Society Saudi Arabia.
Thank you. Thank you, Rawan. Thank you, Adel. Thank you, Sulaiman. Thank you, everyone.
Thank you.
Bye.